And then I'll tell you a little bit about our platform. So what is a security token? My definition, similar to what I think what is that it's really just a blockchain-based representation of some underlying security that's defined by different jurisdictions, regulators. So in the US, that would be the SEC. Presently, what are we seeing as far as use cases? That would be real estate, venture funds, startups, one of the low-hanging fruit here are the private alternative assets. And so things that are really well suited for fractional ownership have been the most common use cases that we've seen so far. In the future, I think what's most exciting about the underlying technology is that really we can tokenize anything, whether that's debt or equity, public securities or private securities. I think we'll start to see a real evolution of tokenization in general across the capital market spectrum. So now that we've defined at a very high level what a security token is, what the security token is not. Let's talk about this because I think this is just as important. I hear people say that we've created a new asset class. I don't necessarily agree with that. What we have is the same types of assets and securities that investors have been investing in for generations. And we talked about those funds, real estate, tech startups. And what we have today is just a new, different representation of those existing types of investments and securities. So just like we went from paper certificates to digitization, we're now moving from paper certificates from digitization to tokenization. And we'll talk a little bit about the efficiencies and opportunities that presents. A security token is not a non-compliant ICO seeking to avoid regulation. There's a saying in the US that you can run but you can't hide. You can't run forever. I'm sure there's something similar in Korea. And I think that we've seen this happen over the past 6 to 12 months where the regulators have really started to catch on to some of the non-compliant actions that were taken through 2016 and 2017 during the kind of ICO boom. Another thing that security token is it's not an easy way to raise capital. I think we're past the easy money phase. And so the days of a couple of people in a basement creating a white paper and raising $50 million, those days are long gone. I think we're reverting back to true startup venture type of fundamentals. We need a strong business plan, strong entrepreneurs. And the last one I have here is it's not a cryptocurrency. I got to put that in there as what we're finding as we talk to more traditional, institutional type investors. When you start saying Bitcoin, cryptocurrency, they absolutely run for the doors. So, we prefer to use the word security token or smart security or digital asset. I think more receptive to traditional investments. Okay, so now let's level set on what the industry looks like today. I'll bounce a little bit between private markets and public markets here, so bear with me. But basically what we have today is a very paper-driven, antiquated environment which makes the transfer of securities extremely manual and extremely inefficient, specifically in alternative assets, so those private placements, limited partnerships, those types of securities. There's a massive lack of trust. So as we think back to the days of paper certificates being exchanged, I didn't believe that this guy had any money, and he didn't believe that I actually had the security. So there was an independent third party created which effectively became a clearinghouse. So that was born out of basically a lack of trust in the space. And then lastly, the lack of uniform process. So again, very paper-driven, multiple entities that don't talk and aren't technologically integrated, it creates a very non-standardized and efficient process for transferring securities. So why do we need tokenization? Technology today, as everyone in this room is aware, is providing extremely disruptive force in financial markets, specifically trading. So in public equities, you issue a trade, 2 days later, the funds are in the opposite account and the shares have been exchanged. In private securities, T plus 8 weeks, so still massively inefficient. Are there significant efficiencies to be gained in public equities? Sure, going from 2 days to 2 minutes. is a big improvement. And certainly going from 8 weeks to 2 minutes from matching to settlement was a massive opportunity as well. When we talk about the issuers of the securities, there's significant administrative and cost savings as far as cap table management, etc. Also allows them to tap into new pools of capital who otherwise might not have been able to invest in that type of offering. And then lastly, for investors, I think everyone in the room recognizes that a digital security or security token offers much more liquidity. So we go from being locked up for years to being able to trade this freely on the market. And also diversification, I think, is sometimes underappreciated. So now we're, again, opening up opportunities for investors to diversify in assets and securities that they've never been able to in the past. Okay, so here we have a quick diagram of what the life cycle of a public security transfer is. So again, we talked about T+2. You can see the 2 middle boxes there, clearing and settlement, the central counterparty clearinghouse and the central securities depository. This is that trusted third party that was created because of the lack of trust in the industry. Still, very redundant, a lot of costs here, and certainly opportunities for fraud and failure. So it works pretty well today, but it can certainly be improved. Now we talk about private securities and transferring paper-based alternative assets. So these are illiquid, non-listed securities. So after a trade matches, it's not unlikely that it would take 8 weeks to actually settle that trade. Incredibly inefficient, very paper-driven, and the reason is there is no central clearinghouse to basically become that trusted third party. So lots of bottlenecks, lots of opportunity for fraud, and it just ties capital up. So you can't have a real efficient market with institutional buy-in when you have an 8-week settlement. So this gives a little bit more detail on what that life cycle of a private transaction looks like. So basically you have the custodians, you have the transfer agents, you have the escrow agents, all of which are dealing with literally paper certificates which have to be stamped and signed with a pen, mailed in the Postal Service. So just massive opportunities for misinformation, fraud, delays, and just a very, very difficult process with respect to private security transfers. So, given what I just said, I think we've identified some of the reasons. Let's drill down a little bit more on why we need tokenization. What does tokenization bring to the table? So as I stated, there's no liquidity in most private alternative assets. So when you invest in a hedge fund, a private equity fund, a REIT, wherever it may be, you're generally locked up for 7 to 10 years. And if you can sell it, you're going to take a 30 to 50% haircut on the valuation of that security. So massively disadvantageous for an investor to have to liquidate an investment. So when we talk about tokenization, the liquidity, so being able to now freely trade these to other investors, massive benefit. Diversification, allowing you to invest in securities and assets that you've never been able to, just gives you more and more ability to diversify and really reduce the risk in your general portfolio. Then we talk about issuers, new pools of capital to raise from. So as we see issuers tokenizing on new issuances, they're able to seek investment from people who otherwise would not have invested because the liquidity profile is much better. Cost saving. So in the U.S. you have non-listed real estate trusts, which pay transfer agents hundreds of thousands of dollars a year to do nothing more than maintain books and records. So with blockchain, that cost effectively goes away. So you can see some cost and administrative savings at the issuer level. And then I think one of the most underappreciated here from the issuer standpoint is the liquidity premium. So because these securities don't trade, the valuation is often significantly depressed below the net asset value. And now that you're bringing these securities to a more efficient, tradable market, the valuation of the underlying security improves, benefiting the issue in their valuation. So enter OpenPaynense. So you can see the diagram that's pretty familiar, and what we've done is we've basically replaced that centralized third party with the blockchain solution, which we bring to the table on the trading platform, which is OpenFinance Network. So shared ledger across multiple intermediaries, again, the custodian, the broker, the transfer agent, etc., which brings, again, just much more operational efficiency and lessens the likelihood of fraud, points of failure, and certain redundancies. Okay, so I'll shift gears a little bit now. So I'll tell you a little bit about us and OpenFinance Network. So as I mentioned, we're the first regulated security token trading platform in the U.S. We launched live in November of last year. And we're currently trading the only two compliant security tokens that have been issued in the U.S. to date, which are Spice VC and Blockchain Capital. So as Spencer mentioned, those are both securitized issued tokens. We are an SEC registered broker-dealer with an ATS license. ATS stands for Alternative Trading System. And we've been working in real estate, hedge funds, private equity, REITs, etc. For the past 5 years. The platform is available to everyone, both U.S. and non-U.S. investors, accredited and non-accredited. And again, we've been operational for the past 5 years, so we were a very strong management team that has very deep relationships within the industry. Investment Passport. So we talked a lot about AML KYC, as did Spencer. Investment Passport is basically our onboarding tool, which takes care of AML, KYC, accreditation, and suitability requirements, and that's done at the wallet level. So it reduces the inefficiencies of having to go through that process for every private investment that you want to make. It's basically a one-and-done, single sign-on tool. Trading, I can skip this as we're running a little short on time. This is just kind of an informational slide here, which talks a little bit about the exemptions for security tokens in the U.S. I'm sure some of you are familiar with Regulation D, Regulation S, Regulation A+, Regulation CF. These are all exemptions to filing a security offering with the SEC. These are the most common vehicles that we've seen for token issuances to date. Each of them have different variances on the amount of capital that can be raised, the holding period, who can purchase them and who can't. But for the most part, it's been Reg D for U.S. investors and Reg S offerings for non-U.S. The opportunity is really in this. We think there's room for multiple players in the security token trading space. Our expertise happens to be in that $8 trillion alternative asset space. And so that's really where we see our greatest advantage and where we plan to focus. But not uncommon or not unexpected that we'll see tokenization of public equities, public debt at the NASDAQ, and Stock Exchange, London Stock Exchange level as they look to disrupt themselves. Some of the institutions that we work with today, and we will continue to integrate with, I'm sure some of these look familiar at the brokerage and custodian level. And we certainly hope to have discussions with entities in Korea and more broadly speaking in Asia about plugging into our platform. Some of our partners, I'm sure some of these look familiar. Securitized, obviously, we just talked about Capital is here today. Issuance platforms, Arbor, TokenSoft, these are all US-based issuance platforms that have created their own smart contract protocols. All right, so I'll quickly summarize, I just got the 1 minute warning. Here, I'm sure everyone believes the first point, blockchain is a disruptive force in capital markets. Some of you'd be here if you didn't believe that. Security tokens, smart securities, digital assets, all synonymous terms are used interchangeably. We believe that the buzz around these terms will ultimately go away, and this will just be the default way that companies raise capital moving forward. It's a much more efficient process. Liquidity is obviously a major pain point in private securities, and tokenization solves for that. Some of the others we talked about, diversification, cost savings, access to capital, and valuation. OpenFinance Network, the first SEC FINRA registered ATS, trade security tokens. Investment passports are a single sign-on mechanism. We talked about the regulations, Reg D, Reg S, Reg CF, Reg A+. And lastly, the big opportunities that $8 trillion alternative asset space. If you haven't already, I encourage you to open a trading account. We expect to have probably 5 or 6 several weeks. Spencer mentioned Lottery.com, Science Blockchain, 22X. You can do that at openfinance.io. And that is